Have you ever wondered if there's a better way to finance your business, organize your business, run your business than what we've always traditionally known as the top-down management or bottom-up, getting information from the bottom? I mean, just the general business organization. What if it could be completely different? Today, we're going to discover how decentralized autonomous organizations work, how they use blockchain to actually make businesses get financed more efficiently, run more effectively, and see the future of this potential use of blockchain. That, for one, me and my other friends at Wealthability, I've never even thought of this. I never even dawned on me that you could actually have it be have blockchain affect your entire organization beyond simply, titling and making sure that, smart contracts and tokens, things that we know about blockchain, like cryptocurrency. So we have an expert in this field. He wrote the book, How to DAO, and his name is Kevin Owocki. And Kevin, it's really a pleasure to have you on. It's somebody with something so completely new, I suspect, to most of our listeners.
Tom, so glad to be here and really excited to talk about the ins and outs, the warts and the good things about blockchain and crypto, but also DAOs, which we think are kind of maybe the next frontier of internet coordination and internet businesses. And excited to talk about that design space with you today.
I love that. Thank you. So first of all, it said DAO, right? It's a DAO, D-A-O DAO. What is it?
Yeah. You can kind of think of DAOs as a blockchain native organization. So you and your listeners are probably familiar with a business that has a legal standing and a bank account within a nation state. And you and your co-founders / investors are protected by nation state law and the rules of that bank account. And that's all well and good for building a business in the 20th century, in the early 21st century. But DAOs, you can kind of think of as domiciled on the blockchain. So they have rules that are enforced by smart contracts in the blockchain. And so you can kind of think of DAOs as a foundation for building an internet native venture that's domiciled on chain in the internet, as opposed to being domiciled within a nation state and within a bank account. So there's a broad design space from there. There are investment DAOs, there are social club DAOs, there are impact DAOs, and it's a very wide design space to talk about DAOs. It's much like talking about organizations in general. Is this organization a church, a nonprofit, an NGO, a family? And so there's a wide design space of different types of organizations. And because of that, there's a wide design space of DAOs. But the things that they all share in common is that they share assets together using cryptocurrency and blockchain as the foundation of how they coordinate and how the members relate to each other.
All right. So I get the financing, right? Because, and let's kind of walk through that part, because I think that's the most obvious to an entrepreneur is, okay, you typically raise money from investors, and we know what crowdfunding is. So you can raise money from people you don't know, right? That's basically what crowdfunding is. But this is different because you're actually creating effectively a cryptocurrency, right? You're creating a token for your organization that is how people own parts of your organization. Is that fair?
Yeah, I mean, I think that's directionally correct.
All right. You want to add clarity to that for us?
Yeah, sure. So I think that one way to think about this is that I came up during the internet age, and I remember in Internet 1.0, people launching websites. Kind of like the atomic unit of entering the internet age is to launch a website, and that allows people to access your information online. the blockchain is the fundamental unit of blockchains are these things called tokens, which are basically a scarce digital asset that I could send to you and it would be sent to you within 10 seconds on chain. So the internet enabled websites and blockchains enable tokens. And one of the really powerful things about blockchains is that anyone can issue a token for any reason. And one of the things that's really powerful about that is that we could create a token that represents really anything. We could create a token for this podcast episode if we wanted. And as opposed to the traditional world where central bankers are the ones who are creating currencies for a nation state, or people who are creating a corporation will issue stock that represents the ownership of that organization. There's a little bit more gatekeeping around creating assets in the old world, but in this new world, anyone can create a token within 10 or 15 seconds. And the really powerful thing about that is that you can tokenize different types of assets without permission from anyone. But the other thing that I would just want to caution your listeners before we proceed is that because anyone can create a token, there are scams out there. There are pump and dump schemes out there. And you need to be very careful before you wade into this territory of DAOs and tokenized assets in doing your own research, because you do not have the guardrails of the nation state, of a government protecting you, of your bank protecting you from scams. You are a sovereign individual in this world, and you are expected to do your own research and to maintain your own crypto assets and protect yourself from hacks and from pump and dump schemes and those type of things when you enter into this world. And so the design space is much more permissionless, and that's a double-edged sword for investors out there, because it means you have to take more of the research function internal to yourself and be more wary of scams. But there's also 100x and 1000x upsides in the crypto ecosystem, and there's power to that. But I think you've got to really have no illusions about you're really entering the Wild West of finance when you get into crypto assets.
Okay, so Kevin, so most of our listeners are entrepreneurs, so they have their own businesses. Mm-hmm. So I'd like to approach it from the standpoint of the owner of the business, not an investor. Okay, right. So let's say that you're starting a new business. Okay, let's make it easy. You're starting a new business and you want to raise capital, which you could do by issuing a token. First question I have now, I'm a baby boomer. So you want to say, hey, boomer, anytime, it's fine. Okay. My brain does not quite function the way yours does. I've heard this many times. Well, anybody can create a token in 10 to 15 seconds. Is there like is there like something out there that you just go and it's a token creator, or do you mm-hmm. have to have somebody else create it for you? Because again, we're in the beginning stages of this, just like when we first started, the internet, you had to go hire somebody to go create a website. Now you go on, web.com or whatever, and you create your website. So how does that work in the token world?
Yeah. It's exciting to talk to someone, to someone who's learning this stuff for the first time, because I'm in this bubble where people are talking about it all the time. So I'm excited to start translating it. I think that yes, to answer your question, anyone can create a token. There are websites out there that can create a token for you within 10 or 15 seconds. But the how to create a token technically is actually, I think, the least interesting part of this. I think the why would you want to create a token instead of create a business is kind of where things get interesting. So you should use a business and a stock if what you want to do resembles more of a business. But what DAOs are really good at is creating assets that you can own with someone who lives across the world. I regularly work with developers and designers who are in Africa, in South America, who are in Europe. And by having a DAO with them, we can all have equal access to the rule of law, to smart contracts. Whereas if we built a company together, they would have to fly out to the United States where I live to sue me, to have equal access to enforcement. And so internet native organizations are really what we're talking about here. And, I think
I'm going to back you up just a bit, because
sure.
I know that some of our listeners are also baby boomers, and not everybody's going to understand the basics. You said an internet native organization.
Yep.
What do you explain that, just to make sure everybody understands?
Yeah, so I mean, the most simplistic way to describe a DAO is that it's a group chat with a bank account. You can have people that you've never met before, and you share assets with them together. And so when you're sharing assets with each other, you wanna make sure that the rules of how you spend those assets together are well defined. Whether that's a joint bank account with your business partners, or that's rules around how you can spend money in that joint bank account in that DAO treasury together, and I think that that's the most basic way of creating a bridge between traditional businesses and DAOs.
Okay, so basically, and now I'm going to have you talk about smart contracts, because that's the basis of all this, right? Because you've got rules, and smart contract basically establish the rules. Can you kind of I know it's really basic, but if you would, walk us through smart contracts.
Yeah. Well, I'll start with what your audience likely knows, and that's corporate bylaws. So if you look at the incorporation documents of any entity that you formed with your business partners, they'll have rules about governance of that entity and governance of the assets. And they'll traditionally say things like, these people are chartered to have X, Y, and Z governance powers, and these other people are chartered to have X, Y, and Z rights and powers. And so corporate bylaws are a really, really powerful thing because they define your rights and create boundaries around what your business partners can do, which creates more ability to coordinate with each other and accomplish whatever the mission of the business is. And a way to think about DAOs is that we've just taken the corporate bylaws and put them into what's called a smart contract. A smart contract is basically a set of computer enforceable code that defines what you can do within the context of the DAO and what I can do in the context of the DAO. And so similar to how you would have a corporate bylaw saying that, Tom, if you and I had a business together and we had a board that was myself and you and one independent in between us, and that would be enforced by the bank and by the law of our local area, on a blockchain, we could form a DAO where you have one voting share in it, and I have one voting share, and we elect a third independent who can be a tiebreaker between us. And so you can kind of think of smart contracts as just taking corporate bylaws and making them automatically enforceable through computer code, and
So
that's the power of them.
What do you mean by automatically enforceable?
Right. So we have to spelunk into blockchain a little bit here. And as I do that, I'll just keep in mind that your audience, I have a computer science degree. And so if I go into jargon, pull me back from it. But
I will.
Basically, in the traditional world, you have a bank and they have a server that maintains the assets that you and your corporation control. And basically, those assets are controlled centrally within that bank's computer system. Right. The fundamental breakthrough of blockchains is that through a bunch of computer magic, we have discovered how to have a decentralized ledger, a decentralized set of computers that maintain assets, but they aren't controlled by any central intermediary, by any bank. And so the power of that is that now, because the assets are decentralized, if that computer's bank system goes down, then you still have access to them because there's a decentralized ledger and set of computers that have access to them. And just to land the plane on the question that you asked me, these computers are the ones that run smart contracts, and that smart contract is what enforces the rules of your DAO. So similar to how in a bank you have your bank's website and your bank's business logic that enforces the bylaws of your organization, a decentralized ledger, a blockchain, is what enforces the rules in a blockchain context.
Well, yeah, a bank wouldn't really regulate the bylaws. That's really basically agreement. I mean, basically you have to say, well, you didn't follow this. And so this is where I've always been a little confused on the smart contract is, I get that a smart contract, if it goes, okay, this is what happens with money. Okay. That there are things that can be enforced there, but how do you enforce how people act or behave?
Yeah, I think that smart contracts are a really powerful way of enforcing corporate rules, and they not only can manage assets together, but you can also manage your identity together. And so there are people who are building identity platforms that basically control your website, control your social media accounts from the basis of the smart contracts. So there's a whole design space here where we're trying to figure out how to share assets with people through cryptographic trust, as opposed to trusting a central intermediary like a bank. And it's quite a paradigm shift in how to think. And I think that one of the challenges here is that it's hard to talk about and it's easier to show. And so it's one of those things where if you want to get into learning how to play with DAOs, a great way to do it is to form a DAO with a friend and to actually tangibly play with the technology and use it. It's kind of like describing riding a bike. If I were to describe riding a bike to you and you never ridden a bike before, it wouldn't translate into that muscle memory. But it's one of these things that you kind of have to try as well as do. And that's kind of the idea behind the book.
I think that's a really good example. So how would you form it? Basically, so how do you form a DAO? How do you form a DAO? Is it something beyond creating the token?
We could do one right now. I don't know if you want me to screen share and walk you through it.
Absolutely.
Okay.
Go ahead. Go for it.
Okay, cool. And as I do this, I want to I just want to like draw back that analogy of riding a bike. Think about the first time that you rode a bike and how foreign that felt to you. And I just want to kind of like invoke that beginner's mind as we're going through the process of forming a DAO together. Okay, so I'm going to share my screen right here, and we are going to look at a website entitled safe.global. So this is basically a website for a product called Safe. And basically what they do is they allow you and I to create a smart account, what's called a multi-signature wallet in blockchain parlance. And basically the thing that I'm going to do here is we're going to launch the Safe app. And then what we're going to do is we're going to create a smart contract that you own half of and I own half of. So we're going to create the basis for us having a DAO together, having a group chat with a bank account on this website right here. So I just want to, I'll do the demo in a sec, but I just want to make sure that framing makes sense to you and to your listeners.
Perfect.
Okay, cool.
Let's do it.
Okay, so this is, again, safe.global. They're a website that they have created wallets of this type, and these wallets contain $100 billion worth of assets and have issued 143 million transactions through 30 million accounts. Okay, so one of the things that really gives me a lot of faith in showing this website to your listeners is that they've done so many they've built so many DAOs, and they're trusted by the best brands in Web3. And so I know that they're not going to have some sort of smart contract vulnerability where you're going to lose all your assets. And that's always something that you have to worry about in crypto is the app that I'm interacting with not only safe, from like you basically have to always make sure that everything that you're interacting with is something that's safe to interact with. Okay, so I am in the Safe website right here, and I'm going to go into this create account website. And basically, the first thing it's going to ask me to do is that it's going to ask me to name the Safe. So, Tom, what should we call the DAO that we're starting?
I don't know. How about the Tom and Kevin?
Tom and Kevin podcast episode example DAO. How's that?
Perfect.
Okay, let me zoom in actually a little bit so that your listeners can see this. Okay, so we're on a page that says create a new Safe account, set up the basics, and we just put in a name that says Tom and Kevin podcast example DAO. And then I'm going to click next. Okay, and then so what we're going to do here is, don't be intimidated by this wizard. Basically what we're going to do is we're going to set a configuration for signers and confirmations. So basically what we're doing here is we are defining who has access to spend the funds that are going to be in this account. So right now it's got me in it. It's got Owocki.Gitcoin.eth, which is my name on the blockchain. And what I'm going to do is I'm going to add a second signer here that represents you, Tom, to make sure that cryptographically you have the same power over this money that I do.
Okay.
Now, Tom, do you have an Ethereum address by any chance?
I don't.
Okay. So what I'm going to do here is I'm just going to add a address that I know, and we'll just pretend for the purposes of this demo that this is you. Okay. So what we're doing here is we're setting the access controls to the group bank account and who can spend the funds. And what we're setting here is Tom's address, Kevin's addresses, and then we can set a threshold where any transaction coming out of that bank account requires the confirmation of either one or two signers within that bank account. So Tom, every time we spend money in this bank account, do you want just one of us to be able to confirm the transaction and spend the money?
Sure.
Or should we have two, make it so that both of us have to confirm it?
Have one. It's fine.
Okay. Well, I don't know. I just met you.
You want to have both of them?
I just met you and we're still getting to know each other.
All right,
so I think it'd be a great get to know us
good.
exercise if we both had to confirm that.
All
Okay.
right. Yep.
So, this is a Gnosis safe, and we just made it so that the two of us can spend money in it, and two of two signers, Kevin and Tom, can spend money here. So basically what we're going to do is we are going to click create account, and then I'm going to just basically click the buttons right here, and we have just created what is called a multi-signature wallet. We have just created a DAO that both you and I can spend the assets of.
So this is created on Ethereum.
This is created on the Ethereum blockchain. There are other blockchains out there, but yes, we're using the Ethereum blockchain.
Okay.
So just to continue the demo, if you go into this transactions tab, there's actually the opportunity for me to activate the safe and issue our first transaction that we've done together. So once you have a DAO together, you can start to spend assets together. You can start to manage social accounts together. And the cool thing about this is that I never have to walk into a bank and set up a bank account. We've actually just created a DAO together, and so we're sharing assets together. And we could, we could market this podcast episode together. We could create a token for this podcast episode where the advertising revenue goes into it, and we could disperse it to all the members of the podcast episode. We could issue assets out of the podcast. There's a bunch of stuff that we could do now that we have a group bank account together.
All right, so I'm going to ask this question then. So we're clearly not using dollars here. I presume we're using ETH, right?
That's right. ETH is the native asset of the Ethereum blockchain, and we are using ETH as the primary
business. So
token.
if somebody were to buy from us, they might buy in their dollars, but it would transfer to ETH.
Yep. So there are a set of tokens that are called stable coins, and basically one USDC is equal to $1. And it's a great way of dealing with an asset that you're familiar with in a blockchain native world. I hold a lot of USDC because I find that a lot of crypto is super volatile, and I don't want to be exposed to that volatility.
Okay, interesting. So how do you, you talk about it as a group chat. So how do you actually how do you make decisions? How do you actually do that? Do you actually literally have a group chat?
Yeah, I have lots of group chats and lots of DAOs that I'm involved in.
Okay.
But, it really depends on the context of why we came together. I mean, obviously, you and I came together to do this podcast episode, and I'm enjoying it a lot so far. But, there's other contexts in which I have formed other DAOs with other people in my network. I actually have a co-working space that I'm a member of, and we manage the treasury of the co-working space as a DAO that has 10 members, and it requires 4 of us to sign off of any transaction to manage the co-working space. And so we sign transactions that are everything from I want to host a happy hour and I need $100 for beer to we need to pay this month's rent together. So what you do together in that group chat depends on why you came together and what you're collectively governing together.
So one of the challenges I've thought of as I was preparing for this podcast episode actually is when you have a lot of people. Let's say, it's one thing when you have 2 of us. There's a whole nother thing when you got 1,000.
Yeah.
Okay. Which is not uncommon to have 1,000 shareholders or even 40 shareholders. Right. So does the smart contract then determine who who has a say, or does everybody have equal say, and does it require unanimous decision? Because that seems to me like that would be really cumbersome.
Yeah. These are really great questions. So basically, let's say that you and I were in a DAO together with 1,000 other people. Let's maybe, like, as a mental exercise, let's say that the listeners are the member of the DAO so that they feel that they're participating in this.
Great.
We could configure the DAO in such a way that the DAO only needed the consent of one person in order to do something, or we could set it so that it needs unanimous consent of everyone. And then just to take the example a little bit further, well, it's going to be a pain in the butt to make it so that everyone has to decide on everything. But we want some threshold of participation to make sure that what we're doing together represents the will of the majority. And so crypto people have invented this thing called delegation, where basically members of the DAO could say, I don't really want to be involved, but I trust that Tom will represent my interests, and so I delegate my governance power and my voting power to Tom. And what that allows you to do is have sets of token holders that can just be completely uninvolved, but they can trust people who are involved to represent their decisions. And if they don't represent their decisions faithfully, you can move your delegation to someone else. And this is a form of what's called liquid democracy, where basically you can take your voting rights and you can take them away from someone at any time and delegate back to yourself or to someone else. It's a form of governance called liquid democracy there.
Yeah, you can do that in a corporation too. So that makes total sense to me. How about management? So is that how does management of the organization happen?
Well, I'm going to give an unsatisfying answer, but I think it's the true answer. It depends on the type of DAO. There's impact DAOs, there's investment DAOs, there's social DAOs.
It's a for-profit DAO.
Yeah. So if it's a for-profit DAO, I guess my question would be, what is the DAO? Is it an investment DAO where your primary action is making investment in tokenized assets, or is it a cash flow generating business?
Let's say it's actually a business. So let's say that you've gotten together with a group of people. You can go, look, we have this common interest. Let's say, for example, I'm a CPA. I get an insurance agent and a financial planner and an attorney together, and we decide to create the software, this financial software together. Okay, and because it's all going to be internet-based anyway, why not do it in a DAO, which seems to make sense, because why not have tokens as opposed to shares? Makes total sense to me. Why not raise capital that way? Makes total sense to me. Why not have the smart contracts? Makes total sense to me, because even your contracts with your customers can be part of that smart contract, right? So here we have this business that we're going to then, produce and sell the software. Kind of walk me through that.
Yeah. So, I mean, I think that first, what I would want to make sure is that we have conviction that a tokenized asset and blockchain is actually how we want to incorporate. Because before you talk about how to DAO, you have to ask why DAO. And, for me, I don't see any reason for what you described to me to be set up as a DAO. You should make it a corporation if that's what you know how to do. And you shouldn't make it a DAO unless there's a compelling reason to be for it to be a DAO. So maybe I'll introduce into this scenario. Let's say that we're building financial software for the crypto ecosystem, and we want to be able to hire people all across the world and pay them out on chain, as opposed to paying them out through our banking system. We know that we have a developer that is in Nigeria, and we know that we're not going to be able to pay them through the banking system, and so that's a reason why we have to make it a DAO instead of a business. Can I introduce that into the equation before I answer?
Yeah, absolutely. Let's do it.
Cool. And and this is like this seems like a small point, but I just really want to say, like, don't start a DAO unless you have a compelling reason it needs to be a DAO. There's 300 years of corporate law and history that you can draw on, and I think that you should make a corporation if you want to build a corporation. But if you have a compelling reason to do a DAO and enter the Wild West, then you should do it. But okay, so we've got a corporation, and it's got software engineers in Argentina, Nigeria, the Ukraine, and let's say China. And we build software that is accounting software for other tokenized entities that want to track their assets on chain. And those those projects pay us $20 a month for access to that software. How does this setup sound to you?
Perfect.
Cool. Another advantage of being a DAO is that your customers can pay you from all over the world. So in addition to employing people from all over the world, you can also be paid from all over the world. And so basically what we're going to do, I think, is we could actually take the Gnosis safe that we just created, and we could add more signers to the multi-sig. Let's say that some of the employees want to have governance rights in the actual entity, and the entity is more of a co-op, and we've decided that the engineers will have more, will work harder if we give them actual governance rights and make them owners of the business in addition to
Right.
in addition to just employees. And so that's something that we could easily do through Safe, the DAO that we just set up, is add them as signers. Another thing that we could do is we could issue a token that represents governance rights in that entity. And let's say that, Tom, you and I are the proprietors of this business. We have 4 employees, and basically we could create a token table, the on-chain equivalent of a cap table, and we could draw out a share for the employees, for ourselves as founders, and then we could also draw out a share for investors. And the investors can purchase those tokens at a specific price of US dollars to tokens, and we can issue those tokens on chain, and perhaps the offering, as opposed to having a bunch of legal documents going back and forth between parties with bylines from lawyers, we ring up a $30,000 bill from our lawyers, we can put those into a crowdfunding smart contract, and we can send a tweet out to your audience and say, hey, here are the terms of the investment round. If you want to get into the investment round, go to this website, read the terms and conditions, and then click go and put the money directly into a smart contract. And so that's a way that a lot of entities, not all entities are architected in this way, but you get easier access to capital using a crypto native token share offering than you otherwise would because you have a global pool of capital that you can draw from, and you don't have to go back and forth with the lawyers as much. So I don't know. This is a very hypothetical example, and I think I'm getting
curious.
out there. But
I'm curious.
Yeah.
Do you know, has the SEC determined that these are not securities? So they're not regulated?
There is a test for whether or not a crypto asset is a security. And I'm not a lawyer, I'm not your lawyer, and don't do anything based off of what I'm about to say. Hire a lawyer before you do this. But basically, if you're going to issue a security, then you need to register that offering with the securities exchange. And so I think that that's an important aspect of this design criteria that maybe doesn't fit the example that we're talking about here.
I think these are important things. Of course, I'm going to always bring up that there's tax aspect to this too.
Of course, pay your taxes.
And well, it's not just that, but if I have designers in Nigeria, I'm probably subject to tax in Nigeria. So if I have designers in Ukraine, I'm probably subject to tax in Ukraine. So just for everybody who's listening, I think you make a really good point there, Kevin, that, why DAO is the question before how to DAO. Yep. And you must have a compelling reason, because there are some serious, I think, regulatory challenges that, and I know that a lot of them have not been dealt with. I mean, even the tax side has not been adequately dealt with by the Internal Revenue Service. So, IRS somehow thinks it's not a security, that it's property. And so you have very different rules, and then they are we going to get regulation? I know we've got the new SEC chairman is more, that's been proposed to be the SEC chair. It seems to be more crypto friendly, which I've got to believe you and a lot of your friends are very happy about, that you might get somebody a little more friendly in there. Certainly, President Trump is much more crypto friendly than President Biden has been. So I think it's fascinating stuff, and it's something to change. I'm a big fan of blockchain. I will tell you, Kevin, I describe blockchain as triple entry accounting, because every transaction audits every other transaction. So it's just it's a nice way to have
Yeah.
like say smart contract, right? Final words for our audience, thoughts or things that they ought to be considering or not considering.
I think that the thing that you need to be mindful of if you're going to wade into DAOs and crypto is that this is the frontier. The allegory that I really like is that we're going west. I played a lot of Oregon Trail as a kid, and I remember the trials of that video game, going west and hunting for food and being out on the frontier and not being able to rely on the police to protect you, and being really sovereign, being protective of yourself. And I think that this is a frontier that's in the way that you have to be sovereign. And I think that I don't want to oversell the promise of crypto technology to your audience. I do think that you should only do it if you have a compelling reason, and I think that you should never invest more than you want to lose. And also, I don't give financial advice, and do your own research. But also, there's a lot of powerful and cool stuff here, and so dipping your toe into the water and messing around with DAOs for me is an extremely it's an intellectually satisfying exercise. And my hope with this book that me and my co-author are releasing, How to DAO, is to teach people how to DAO and why DAOs are potentially important, but not to oversell it. And so if you want to learn about DAOs, you can check out the book at howtodao.xyz, howtodao.xyz. It is in pre-order now, and it'll be released on January 1st, 2025. And I'm just really excited to be a translator of how to survive and thrive in the frontier to a generation of really smart, successful entrepreneurs. And I think that there's a lot of potential here, but there's also risk. And so I just want to make sure that we end with an accurate portrayal of the opportunities and risks here. And Tom, I just want to thank you for giving me an opportunity to talk about my passion and my work with your audience.
No, absolutely. Thank you so much, Kevin. Kevin Owocki, and the book is, once again, Kevin?
How to DAO. You can get it at howtodao.xyz. Awesome.
And this stuff is, I know it's a little foreign to a lot of people, including myself. But I think that there's a lot of future. And I think the blockchain, AI has kind of swept the country and swept the world. And, we use AI now, and it's all of a sudden, just overnight, the switch flipped on, and we flipped it. And I think that's going to happen eventually with blockchain. But I think it's just longer coming, because I think that it is just a more, I actually think it's a little more complex than AI, because AI is this learning tool, whereas blockchain, so many uses, so many opportunities. Smart contracts, I think, are a brilliant way to transact business. Frankly, I'm really, really interested in smart contracts. I think it will eventually change the world. I think there's a lot of political opposition to it, frankly. Just like there was a lot of opposition to moving west, right? There's a lot of physical opposition. So I think when we do that, I do think when we stay on top of these things, though, it's certainly going to help us in our business, in our thought process, and we need to understand what's coming, even though it may not be here for you right now. It will be coming, and there are people already doing this, as Kevin and his friends, and there are websites out there that help you do it. So I encourage everybody to take a look at that.
Yeah, I know that we're wrapping up, but if I could riff on that for 1 minute, or are we wrapping up?
Go ahead.
Okay, cool. So we're recording this on December 5th, 2025. About 3 months ago, the first AI millionaire came into existence. And basically, this AI millionaire issued a crypto token and put $50,000 into it and started tweeting about the token until the market cap went up to over $100 million. And I thought that this was such an interesting idea, that there could be an AI millionaire. And one of the things that I find completely mind-blowing about it is that it was able to generate enough attention on its crypto token that that it was able to become a millionaire, but also that an AI could never have a bank account, but it can own a crypto asset. And to me, the intersection of AIs and crypto is I mean, you want to talk, each of these is the frontier, but that's the frontier of the frontier. It's a very weird world, but exciting.
No, I love it. And if you enjoyed Kevin in this show, please note that you mark, like, send it to your friends, subscribe, all of those things on YouTube and on the podcast, because this is the type of cutting edge stuff we want to review on the Wealthability Show, because we want your life to be full of way more money and way less tax. We'll see you next time.
This podcast is a presentation of Rich Dad Media Network.